Good morning, everyone. Welcome to Admiral Markets. Glad that you could join us here today. We're going to take a look at the Forex market together and the charts and view our technical analysis. So before we do that, though, the risk disclaimer explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Already. So a rough trading plan, of course that's a very rough sketch, but it would be too much detail to go through everything. But basically we always want to take a look at defining the trend and deciding if we trade against it with it, or are we looking for range trades. We're looking for opportunity. What do we define as opportunity? It could be a pullback, for instance, or a breakout. Are we checking any filters? Yes. Could be anything, but in my case I definitely look at daily tops and bottoms, divergence for example. Established triggers, that could be for example the fib itself, but the entry could be a candlestick pattern at the fib. To distinguish that, I primarily use fibs, trendlines, moving averages, and the awesome oscillator for instance. I also use wave count for my own personal trading for instance, but although I don't mention it that much here, because I know that there are not many people really interested in wave counts, but or not many, but I would say there at least, it's difficult to say how many really look at that, but I wouldn't say it's the majority. There are more probably who don't look at that already. So with that said, let's head over to Admiral Markets website. And I think today is going to be an intraday webinar, but I'm not sure. Let me check. Today is the 22nd. Oh, it's the webinar has been removed already. It's a bit too early for that, but that's odd. Well, yeah, I'll have to check with the organizers because it would be recommendable to only remove it actually after the webinar has been finished, but okay. I think that was by accident. In any case, let's take a quick look at the Forex calendar. So we had a Bank of Japan press conference just not so long ago, I believe. We have pound news. That's pretty substantial pound news coming up in 1 hour 40. MPC meeting minutes, claimant account change. And we have the CAD interest rate today, plus statement, report, etc. So those are the two major things for today. So euro dollar, let's take a look. Euro dollar did eventually use that level I was talking about, 134 for downside, but it didn't go as far as I was thinking it could. It's just a very small downside, so in a way it's good or at least it's good, I think that most of us avoided it. So you can see that there was some downside pressure, but it really, in all honesty, these few pips to the downside, it would have been difficult to take profit. It really only moved down about 25 pips. That's really, from an intraday swing perspective, quite small. I'm not looking at 25 is really, normally doesn't even match to a 1-to-1 in most cases, so or maybe just barely a 1-to-1. So I think in this case I was planning to have a stop loss at 55, so it would have been 16 pips, so it would have been 1.5 to 1 in fact, because I was thinking about entering here with the stop loss here and a take profit of way lower. So the take profit would not have been reached, but so yeah, it didn't go too far. In any case, that's what I was a bit afraid of, that it wouldn't have that much muscle to continue. We did get some retracement, as you can see, throughout the Asian session, a bit of upside, and we're still in the same situation as yesterday in the sense that this in its entirety is kind of becoming a retracement potential of this downside, and we could still make that one fall that we thought would happen yesterday, but we didn't get enough follow through. That downside yesterday is actually part of the correction, as you can see. And in that regard, same analysis as yesterday. There is that potential to make one more fall here to go maybe to, for instance, 134.70 and then maybe 134.20. All right, why those levels? Because that's a minus 272 target of this swing high, swing low. If you put a fib from that top to this bottom, that's where you have the target, and that's where you have a target. We failed yesterday to reach those targets because we bounced off of this support here, and that can happen, right? That's why that's why support and resistance is so important. So I didn't plan. I wasn't planning to take profit there, but it can happen even with a smaller bottom like this. So when would we know that we're actually moving down? I guess we can see the moving averages here are still pointed to the upside. So let's take a look at the 15. What we basically need is for the 50-minute world to be in a downtrend. We can see that's not the case as yet. Everything is still pointed up. Price is still in the moving averages. So what I would like to see is a drop, then a pause, and then the next drop would be a break of this trend line, a break of this potential bear flag, and most likely continuation. So then I would be interested in the euro. At the moment, not, because it's too early to sell in my opinion. We don't have the confirmation that we are breaking to the downside, nor do I want to buy here because of the fact that we are in a downside trend here. And this is looking so far correctively. Upside would only be interesting, in my opinion, if we break out of magenta and if we break, for example, above this top and moving average like this. All right? We would really need to break above it, make a small pause, and then the next break is something I would already find interesting. But not until that moment. Back to the 15, you can see already some downside momentum, and that could be, soon we could get that confirmation maybe of downside, but in my opinion, too early, according to my philosophy. But I'm always looking for breakouts, so it depends how you trade. If you're a very technical trader that's looking for bounces off trend lines, then this would have been a great short, right, at the 50 fib, at the trend line and fib confluence. I don't trade those that often. Sometimes I do, but they are good turning spots sometimes. It's just quite early in my day. It was only 5 a.m. at that time, so you just have to be lucky that you see also a particular spot like that, or have a pending order there. Although that has its risks. I like to set pending orders, but I do like to set pending orders when I'm actually behind the charts. I don't like to have pending orders when I'm not trading or not, like, sitting literally behind my PC. That has everything to do with the fact that I like to see price action. I like to see how it's moving, if it's moving impulsively, correctively, and take that into consideration if I still want the pending order or not. All right, so we can still zoom in out to the higher time frames, but we discussed those yesterday. But so basically 4 hour is in the downtrend, and if we fall and break below orange, there is a potential to go to the purple target. And where do the purple targets line up? With the orange fib, the 786. That could be a bouncing spot. We can also put a bigger fib on from here to here, and we see that we stopped at 38.2. That target is at 134.50. Alrighty. Well, it depends which fib we take. If we take it from here to here and see this as a fifth wave, then actually the targets line up at the same levels. This minus 272 is then in fact the same as this minus 618. So there are clear Fibonacci levels there where price might bounce off, as we can see. Anyhow, let's move on. If you want a particular currency in mind, by all means, let me know. Let's see, pound dollar is finding some weakness at the moment, but that could be a hook back potential for more upside. We did break out of that trend line, which does give a potential for this pound dollar to bounce off of, for example, these fibs, 164.35, 164.20. So something like this, impulse triangle up. Now yesterday we were talking about the fact that although we were breaking this potential triangle, we have to be very careful because this could be a bouncing spot for upside, and that's indeed what happened. Right? It was a very choppy move because if we zoom into the 15, we can see it was a lot of chop up, down, and then finally broke to the upside. What happened, in fact, was expanding wedge. You see that? You don't see them too often, so I definitely want to show you because they're quite rare. You don't see them that often. The pound yen had one yesterday as well. And that's what happens. Every bottom and top gets broken, and then the opposite happens. So interesting pattern. But you can see, as I was saying yesterday, this is daily uptrend, and we had a 1 hour impulse and triangle that could be a bouncing spot. Structurally wise, it's more successful bullishness, right? So you can see how important it is to look at these things as patterns like that. And the break here, very difficult to trade. Also, the space down to the fibs was very small. So anyhow, from a 15-minute perspective, we are getting some retracement here. And personally, I think what I would be looking for is, for example, a correction and to see if we get a bounce and break up. A bounce at the fibs and a break of this trend line. Those are the things I'll be watching. If that doesn't happen, then we break probably this bottom or this trend line, and we'll probably see a bit more downside. Some of you might be interested in shorting this area. I'm not saying it's not possible. We do see some downside momentum, so we could see some continuation down, and that is possible. Then again, we could also easily break this magenta line and continue upside. So this idea would not fit within how I envision trading for myself, because once we have a breakout, we're in uptrend. I'm not looking for counter trend trades in that case. It's my personal trading style. But there is some small bearish, or some bearish momentum now. But to me, it does look like a break, pullback, and go. So the downside is limited to the fibs and where I'm expecting support, and I'm expecting upside continuation. So for me, this is just a very small space until we hit those levels, and then we could potentially do that. So I would rather wait for the upside. All right, we are at the bottom of our uptrend channel, and we've broken out. So that's the pound dollar. Euro pound did continue and broke through our green zone, in fact. So set in the downtrend at the moment. Aussie had some news yesterday, actually. I think, come to think about it, there was a big positive spin here on it because the CPI was all green, and it did send this Aussie to the upside. So we didn't get the break of this trend line. I was waiting for that, although I was not, couldn't trade it during my night. But before that or after that, I would have been interested in this break. It didn't happen, though. We bounced off the trend line in an impulsive manner. So let me check something. I'll just add a new different template for the moment. 1 second. Yeah, this is actually making a bullish break as we speak. Right, there's a 1 hour fractal here. All the moving averages are bullish. So there is a potential for it to move up. How much? Maybe not that much, because we are in a downtrend from a 4 hour perspective, as you can see, a very strong one. So I wouldn't expect or count on much. We have a trend line like this that price broke through. We have moving averages here, and if we put a fib, we have a 50 fib there. So, upside I think is really limited. 89.20 itself could already be a big spot for downside continuation. So if you then zoom into the 15, sorry, 1 hour, back to the 1 hour, we can see that upside potential is, in my opinion, very limited. We can put a fib on this very first correction, and you can see we already hit the minus 618 target. That itself already could be a resistance spot where we see some downside. And then the question is, do we break to the downside, or do we bounce one more time up to the 50 and then move down? All right, so that's my opinion on this Aussie. It is making bullish momentum, but the space at the moment is too limited. If this starts to make a bull flag like this, and we break to the upside, I wouldn't mind trading it from the blue spot up to the orange target there. It's not a lot of pips, but still, it could be a good 50 pips there with that breakout. But I want to see a bull flag, so I know that this has still space for upside. At the moment, we are right at the resistance spot, at a confluence of fibs, and that could be a turning spot. I don't want to trade that turning spot because I see this big impulse, which means to me there's a danger that we will move correctively. So that's why I'm in a waiting mode and want to see how this continues before trading it. As I said, from the bigger perspective, this is in a downtrend, so daily chart is showing the same, and just recently broke the bottom, in fact, so there's no reason to change ideas on that. There's definitely a downtrend on the daily and 4 hour chart. 50-minute chart is responding to the 30-day point 2 and moving down. And what we'll probably see is a bounce here somewhere, and that may be weakness, and then again down like this and some bull flag. It's what I expect, but let's see. In any case, this big spike was a new spike, and it's difficult to trade. Even if you have an entry order above it, or you're trying to catch it you're waiting and looking at the charts. With a news event like that, it's difficult, right? This is definitely a news break, no doubt about it. Kiwi. Let's see. Remains the same picture, doesn't it? It's just a lot of support and resistance all over the place, and really difficult to tell one way or another. It's just so messy, so many chart patterns, so much consolidation, so many spikes. It's a lot of tops and bottoms all over the place. You could probably draw hundreds of these red lines and green lines everywhere, because at every corner there's some kind of support and resistance here, just because the awkward mess of going sideways like this creates so many tops and bottoms. Look at this. I mean, it's just very, very, very messy. So the only thing we could do is actually look at the day chart and say, what is this mess all about? And then we can see that this mess is actually occurring after an impulse up, and then we got all this mess. And it's still in the mess, and it's been like that since October last year, November last year, or even September, depending how you look at it. So how does this fit in the weekly chart? Basically, let me redo the charts here for a second. Basically, we're in this triangle, right? That's what's happening. So, and price is had a big consolidation here and is now making a big consolidation here. The Kiwi dollar is really is not a currency pair that speaks to me at the moment. I don't like this consolidation, and I really don't see anything that could be tradable at the moment from my perspective. No, this is a triangle on the 1 hour chart, but I wouldn't, trust any of these breakouts, in fact. But normally speaking, if we break above here, there could be this trade, or if we break below here, that could be that trade. But the Kiwi is acting so choppy that it's difficult to trade breakouts, as we can see. So with this pair, at least. So, Swissy, dollar Swissy. For our chart, we are getting some follow through off of that 38.2. We could keep on marching forward up to the minus 272 target at 92, as we can see. Well, we're in this channel, right? That's obvious. We can see that price is moving nicely in this up and down within this channel, making higher highs and lows. Very nice channel, in fact. Let's take a look at the 15. And we most recently had a spike above this triangle at the bottom of that channel. So let's see. I think that this spike is a bit early still. It could definitely be a spike, pullback, continue, but I'd probably rather wait still a bit and get a bit more confirmation if by waiting for the next break. This is still a very early consolidation and the first spike, so I'll be cautious of that. But if we do pull back and continue, that would be interesting. Right, so it is definitely an interesting price action at the bottom of this channel. So let me put that on my watch list. 1 second. Alrighty. Right, that's always good. Bottom of uptrend channel, we had a higher high here, we're in uptrend. That's good stuff. Dollar CAD had a break to the upside as expected of that triangle, right? The triangle that we have on the chart here, very nice, well-built triangle break, but a pretty fast move down, and we've basically been in a consolidation. Don't forget the CAD is an interest rate, so I wouldn't touch the CAD or any other CADs. Let's see, this is dollar yen, very spiky price action here at the moment with all these, with the Bank of Japan press conference, also a lot of up, down, up, down, up, down, up at the moment. Let's see how that ties in on the 1 hour chart. In the 1 hour chart, you know, I was still a bit bearish because of this momentum and I was expecting some downside. Now I really went into a neutral mode and I'm saying let's either wait for a break of this part or this part, in fact, before trading it, because when we break the top, we have a potential to move to the next top and maybe continue. And if we break this bottom, we have the potential to move to this bottom. Right? This, clearly, we had an up, a V-valley, down, up, and this is a bit of a consolidation. This could break either way. So in the grand scheme of things, the question is, was this a correction of this entire upside and are we breaking to the upside already? Or was this the upside and it's just this is actually all part of the correction and then we move up? So that's simple, in my opinion, dollar yen, very straightforward. Either the correction ended here, this is upside, or the correction is not finished yet, and we're still going to correct more and stay within this consolidation and maybe move lower to the 38 and then break to the upside. And the only way for me to know basically is either A, we move down to the 38.2 at 102.20, and if we bounce there, then bingo, we have the confirmation of a 38.2 fib bounce at 102.20. Or if we don't get that far, then a break of this magenta and a break of this red resistance, then I know that there's a good chance that we're back in the uptrend. So that's about it from the dollar yen. Pound yen, it was unfortunate. I had a trade the pound yen from here upon the break, no, here, sorry, upon the break of that black trend line, and it did break a bit, but then it quickly pulled back, then it broke again, then quickly pulled back, and it had everything to do with that rising or the expanding wedge, which was very, annoying for me and anyone else who took that trade, because it's not a pattern you want to encounter if you're taking a breakout trade or with the trend, and you don't want to see expanding wedge, because that definitely puts the stop loss at risk, and that's what happened. So that's a pity. I was looking basically to capitalize on a break of this trend line, and I was trying to take it as a target up to the red resistance. But as you can see, we went into a bigger consolidation here, and that never happened, unfortunately. So that's part of life. and there's no other way around it, right? Those things happen. What I was trying to capture was this upside. We had a trend like this. I was trying to see if we can get basically acceleration out of that channel, but that never happened. And one of the reasons was that pound dollar was really wacky, made a lot of ups and downs. Dollar yen made a sturdy fall yesterday. So those two things were the primary reason for this pound yen not to have sufficient power to move to the upside here. At the moment, I don't see anything interesting. There's still the potential to break out of this and break to the upside. There could even be a potential to maybe break to the downside below this line. However, from my perspective, because I took that trade yesterday, and it's quite consolidation, and I don't see a very good trend line, I would rather hunt for some other opportunity personally. How about this euro yen? The euro yen, as you can see, funny enough, sorry, is, well, yeah, it's very choppy. Look at the price right in the middle of the moving averages. Moving averages are over each other, are overlapping each other, right? So there's no direction. There's more direction if, for example, price was here, right? There was clearly price was underneath the moving averages. Bingo, you got this fall. Here, this is quite choppy around the moving averages. Moving averages are going like this, around like each other, right? Are basically flat, and price is in them. When that happens, or price is in them, or kind of like half spiking out, when that happens, you know that price is in a range. This is a classical example of a range, right? We have spikes above it, but the moving averages are flat. So what kind of consolidation is that? We could put a trend line like this and a trend line like that. So that's easy. For that 1 hour world, the downside break would be with the trend on the 1 hour world. The upside break would be early and would be counter trend at the moment. 4 hour world, you can see that the 4 hour world was an uptrend, a beautiful uptrend, got a sturdy retracement and still in that retracement, and is slightly more bearish at the moment, just like the 1 hour is fully bearish. So 4 hour is slightly bearish, 1 hour is bearish, 15 is a range. So obviously the downside break would be the best. The upside break could happen too, but we'd have to be a bit careful with that. The daily is still up, and we're back in the band here, which itself could be a bouncing spot. So with that said, we can put a trend line on these stops. If we break out of these stops, we know that we're back in the daily breakout to the upside. So down to the hour, basically we have a smaller consolidation here and then a bigger consolidation here. And the arrows I have on the chart there are the potential breakout trades of those zones. Okay, so you can see two consolidation zones, one bigger, one smaller. Alrighty. So with that said, let's take a look at the Aussie yen. Aussie yen fell to the bottom, right? We were saying that that is a potential support level. right there, and that's where we bounced off. So that was a good downside break to the support. Now we're bouncing off that support. If we look at the hourly, that's what could happen if you bounce off a support like that. The whole psychology changes. We had a very strong downside, and then it's upside. Is that a retracement for more downside, or is that actually the new upside, and do we get upside and a retracement for more upside? And that's always difficult to know, but one thing is important is support and resistance, because support and resistance is a spot where that particular psychology, the different roles switch, right? After the support, the downside was over and upside actually was stronger. Therefore, if one would still be looking for shorts, sometimes it would have been okay, but you can see that the actual momentum was to the upside. And we bounced off at 618. Target will be this 92.80. So we're very close to the target, so it doesn't make sense to look at that at the moment. Euro odd, let me show you that again just in case you missed it. The target, if you put a fib on this the first three waves up, we went to the 61.8. And the minus 272 target of that is at 92.80. We're now at 92.62. The difference, 18 pips. Not worth the risk. Definitely not as hourly. I doubt that it's worth the risk on any time frames at the moment. Euro odd. Let's see. We are looking at a downside at the moment. We're breaking this fib as we speak. Well, it could be weakness. Let's face it. I think everyone would agree that that's a potential kind of topping formation, especially now that we're breaking to the downside. This, this could have been a bull flag, could have been, but we're breaking the bull flag to the downside. If we were breaking the bull flag to the upside, we would have seen this as a with the trend breakout and continuation. We aren't doing that. We're actually breaking to the downside. So that is possible that we're getting some rounding here. The daily chart. We had a good breakout here, but failing to move forward. So now the Aussie, of course, definitely the strength of Aussie coming after those news releases. This too, a big news spike here on the Euro odd, in fact. I don't know. I don't see anything of an interest to me. This is basically there is downside momentum, there's downside power, but yeah, it could find, I don't know, it has moved already a lot anyhow. Minus 618 target could be at 152.30. That's about 30 pips away from there. There's also a support level here, and if we probably put a fib on this entire upside, no, that doesn't look interesting to me. If we were to stop here and then make a bear flag, that break would be interesting, right? Nothing wrong with that. or if we get moved down, we bounce up and then start making a bull flag and then break, I would gladly take it to the upside. But until that happens, I'm on a waiting mode with this euro odd. Pound odd the same, by the way. Pound New Zealand. Let's see. Well, we have this trend line, this purple trend line in play. A break of that could be a potential for the currency to break to the downside. This 1 hour chart here, probably the most important trend lines. Let's take a look at the 4 hour. 4 hour very choppy as well. Daily too. New Zealand not only choppy against the dollar but also against the pound. Let's go to the 15-minute world. Let's see what that says. We got some downside momentum. I guess that a break, if you look at the downside momentum on the 15, yeah, it could be a downside break maybe here. But it would have to push through purple. Let's see, anything else? Well, why don't I ask you what you would like to see, and we'll take a look at that. I'll be back in 20 seconds. Alrighty, folks, sorry for that. No requests as yet. It's a bit of a slow day at the moment. I don't know. Yesterday seemed more interesting to me. Let's take a look at the pound odd yesterday. I was actually buying that off the 38.2 fib. That wasn't a bad idea. It did pretty well. It was the bouncing spot here. It was the turning spot. So caught it right at the turning spot, and yeah, that was not bad. But the thing is that we didn't really get the follow through I was hoping for, and that had everything to do with the news event. So what can I do? It did hit the minus 272 target, then seemed to be continuing up to minus 618, but then the news event totally smashed it. So yeah, that's just a bit unfortunate. Otherwise, there was a lot of good things on with this trade. Just couldn't break this resistance either. There was a level that right there, that a top that we couldn't break. The funny thing is, from a daily perspective, uptrend, 4 hour perspective, uptrend. 1 hour, we had in fact this channel to the upside, like that. So there are a lot of good things for a trade like this. We had bull flags like that, bull flags like that. This bull flag got broken. We didn't get a pullback, but we just failed to continue right at that resistance. And that can happen. Nothing we can do about it. It's a pity though. This break was a good one. The pullback was a good one, but just not enough momentum. So let's see. Today CAD. Yesterday we had CAD weakness. We have the interest rate today. Yesterday we had odd weakness, but the news event turned those things around temporarily. I said, regarding the odd strength at the moment, I'm very cautious with that because first I want odd to correct and show its true color. Is this going to be indeed more strength, or is this strength just a retracement for more weakness, in fact? And that's the question in general across the board, in fact. So not trading the CAD due to the interest rate, not trading the odd because of the unknown factor at the moment, not trading the pound at the moment because I want the claimant countries to be behind us. The yen is an unknown position at the moment. As I said, I want either a break here or a break here. As long as price stays between those magenta lines, I am in the waiting mode. Euro dollar, maybe the euro is the only thing that actually makes sense, the euro dollar, because otherwise the yen, the Aussie, the CAD, the pound, I'm all waiting. I don't like the Kiwi. It's too choppy. So that doesn't really leave much choice at the moment, as you can see. So, okay, yesterday was a bit more interesting in my opinion. Let's see. Dollar Swissy. So dollar Swissy or euro dollar maybe could be the better ones today. Let's see. 1 hour chart. Last hour was bearish. We had a few hours of bearishness. So we could see maybe some small downside. I would like to see a bounce and then break. That's, at the moment, probably the most interesting trade that setup that I've potentially discovered, potential trade setup that I've discovered, because other than that, I don't really see anything interesting. I think that the dollar is supposed to see up and euro dollar down. Of course, they're inverted, correlated, so one of the two would make the most sense, one or the other. Anyone else has something to add or ask? I know that this is a short analysis for today, but does anyone else have something they want to talk about? Maybe I'll find some inspiration with you, because we can take a look at long-term charts, but from the short-term perspective, from this today's perspective, I guess this is about it, what I see. We could take a look at others as well. So let's take a look at the dollar index. Well, hopefully you're formulating some questions. Let's see. Broke out of this purple one. This is the 4-hour chart. Well, let me start with the daily, right? The daily, we bounced off this weekly support. We have weekly resistance here, which means that we are in this consolidation. Weekly perspective, we are in this magenta consolidation. So we have two consolidations. We have purple and magenta, and we're about halfway the purple one. So a lot of chop. If we then zoom into the daily, we only see the purple magenta, the purple consolidation, but we don't see the magenta consolidation, right? And we're about halfway right at this resistance. If we then zoom into the 4-hour chart, what do we see then? We see a potential uptrend channel. We see a resistance line here. Let me make that orange. And we have a resistance here. So that's the most important. We broke out of the 4-hour triangle to the upside in this uptrend channel, but we are approaching this resistance, and we have a resistance line like this. So what does that mean? Bullish break, resistance, we're at a bouncing spot. We're at a talking spot. Is this a rising wedge, and will we break the uptrend channel? Or will we actually break the resistance and continue in this uptrend channel? So the dollar is, in that regard, getting to a point that definitely piques our interest. The funny thing is, though, that the 1 hour chart price is above the moving averages, right? Trying to poke out of it, but the 15 isn't aligned yet. The 15 had some downside correction and is trying to revert back up after a bounce here. So let's see. It could be quite choppy until we, get a clear break as well, because it could stay within this, it could take a while. Wave was asking, or Waze was asking about the Euro Swissy. We could take a look at that, and Amdat is asking about the euro dollar. And we just quickly look at the euro to dollar because we're talking about this dollar index anyhow. So Amdat is asking, could you tell me for euro dollar which pair help to visualize what could happen next? I'm not sure if I really understand the question, in fact. Normally, if you look at the euro dollar, that is the major itself, so you just look at the euro dollar normally, if I understand correctly. If you're looking at, let's say, pound yen, it makes sense to look at the pound dollar and the dollar yen, for example, okay? If that's what you mean. If you meant, like, could you show me visually what could happen with the euro dollar, then I would say we could see maybe some a bit downside. That's not too interesting. Then up, and then I hope for a break, because that would be a nice trade, I think. Euro dollar and euro odd are a bit different. Euro dollar is in a downtrend. Euro odd just turned to a downtrend, right? Let's see. I think they're a bit different, but let me check. You see, euro dollar has big downside already. Let's see. Is this equal? This is a bit more zoomed in. And you can see that the downside here is less prevalent. We are actually, from this perspective, it's more of a sideways zone. If we zoom out, of course, we see that there is that upside here. Well, small differences, I guess, but that, of course, is explained by the fact that the odd USD is moving as well, and the odd USD was moving down, which means there was more odd weakness than dollar weakness. So let's take a look at the Euro Swissy. And Sylvia has a question about breakouts and bounce trades. Good. So first, the Euro Swissy, as I promised, way. Let's see. I don't look at this one regularly, as some of you might know. I do remember looking at the potential break here, I think, if my memory serves me right. I'm not 100% sure anymore because it was already a while ago. I think we had these lines on. We said this is a triangle, but the break to the downside really didn't go too far. It could happen, especially with the Euro Swissy, I can imagine. Let's see. Sorry about that. Okay. Now we're breaking to the upside and getting some consolidation here. So let's zoom into the 4-hour chart. definitely, definitely prices above the moving averages, but it's quite choppy as well, as you can see. So consolidation here and a potential consolidation like this. We can even put a trend line like that. In fact, that's a support trend line. This is very difficult to trade because I like to use fibs in trends, and the daily chart is so choppy, it doesn't make sense to put any fibs on, I think. Well, maybe recently we can put a fib on this move. Let's do that. If we put a fib from there to there, we had roughly a 50 bounce, and the target would be 124. Well, let's see if we get there. It does look bullish at the moment. It does look like a break, pull back, go. So anytime maybe it will move down here. That could be a bouncing spot for that upside, and then a break above orange would be the confirmation. But yeah, it doesn't look that appealing to me somehow. But if anything, then I would say this personally. Sylvia is asking, is making an observation that I like to trade breakouts, and I agree, that's true. And is saying, or asking, can you tell us something about when and why you decide to take a bounce trade instead of a breakout? Yes, I do not take as many bounces as I do breaks, relatively speaking. I do take some bounces. I take primarily bounces after a breakout because I tend to find those have a bit more follow through than just any ordinary bounce. The only thing though you have to be careful of when taking breakouts, bounces after breakouts, is that there's not a big top or bottom in play, like close by. There's no divergence in play, because what happens from a theoretical point of view is this. One second. Let me find a piece of chart that's let's see. Or here, let me use this for a second. What happens is that if you have, from a theoretical point of view, you have a consolidation like this, or a bull flag, right, as we know it. Let me try that again. Bull flag. And price was impulsive prior to that. Then the break after that is a good trade, and I like those very much because this is an uptrend. This is a bull flag. Therefore, the break to the upside, yeah, very high, good statistical advantage one has here. That's why I like trading the first pullback and then first bounce, because the likelihood that this is becoming a trend, bull flag, and then we get a break, pull back, and go is high. That's why I like those bounce trades after the first break, because there's a good statistical edge in getting that follow through. Now, when do we not get the follow through? When do we break, pull back, and not go? That would happen if we are close to a resistance of a major level, major fib, divergence. What happens with divergence is basically that we are breaking, but we don't have any sustainability because there's no convergence here. And in fact, what happens is that after we pull back, we reverse instead of continuing up. Now, I know for some of you this theoretical part might not be interesting, but I think it's important to at least realize what are the weaknesses and strength of certain setups, right? Certain strategies, certain systems, and realize that, because that helps with either setting up filters for them or understanding its expectancy, etc. So that's definitely one reason when I take bounce trades instead of breakouts. The other reason would be if there's a very good fib, a very strong fib, if there's a good target, fib target. So basically fibs are other reasons I would take a bounce trade. I'm not too keen on taking bounce trades off of support or resistance. It's just that, not that I don't think it's not good. It does definitely make sense. It's just that I've never really focused on that particular trading as yet. Don't forget, it's just never really went into that side of it. But I always use more support or resistance as a filter, not really as a method to enter or as a trigger. I've used the fib more intensively. So for me, breakouts and fibs are the primary weapons indeed. Although I think when looking at break or trend lines, it's easier to just say, this line or this line has to be broken. It keeps things very in perspective, I think. But if there's a good trend, fibs are great. Also great about fibs is that you could even trade off of their targets, right? If you're in a downtrend, let's say, and you get a correction, we can put a fib like this and wait for down, up, and if it does move up, wait for the target there, right? One more time. Wait for the target to re-enter that downtrend, in fact, at the retracement target, if you know what I mean. If we're in a downtrend, we get upside, wait for the upside to finish at its target. That is usually a very strong area. Of course, not always do we get to the target, because sometimes we just continue in that downside without making the three wave correction. But if we do, it's usually a very nice one. For example, let's see the euro dollar, for example. If you were planning the euro dollar trade, a good idea could have been, for example, is to put it on this fib, and once the price gets to the minus 272, there's a good chance that that is a resistance. It's a 50 and 272 resistance target level. That's certainly a level that makes sense to have heightened attention there, because that is definitely a bouncing spot. I like fib levels for bouncing trades, and I use also even fib levels for breakouts. Once we have a breakout, I use a fib to indicate where the bounce could happen right after the breakout. So primarily fibs. Why I like fibs so much for bouncing trades is that they are pretty straightforward and fixed levels. A bounce trade off a trend line is way more difficult, because the trend line is something more subjective, and that's why when I trade breakout trades of trend lines or moving averages, I always use fractals because those levels make it less subjective. Therefore, if I ever trade bounces off of trend lines, then I wouldn't trade the trend line itself, but the first break of the opposite fractal basically. So that would be this fractal. Do you see my point? So when I'm looking for a breakout, I want to see a break of this trend line, right? And not only the trend line, but also the fractal. If I'm trading a bounce, I want to see the breakout of the opposite fractal. So that's how I treat trend lines and moving averages. But with fibs, I use the levels sometimes themselves. And if I'm not too sure about the fib though, then I would wait for either a fractal break or price action confirmation at the fib, or I just skip it in its entirety. So that's why the fractal is, it is a good, or yeah, it's a level that is important for me because it indicates all these support and resistances that I usually wouldn't see. So it's a great visual tool, but also important boundary for me. When is the breakout or not? So if you have any follow-up questions, Sylvia, by all means, let me know. So as you can see, I don't have really many other things I look at. I don't really use the pivot point indicator that much because I'm more of a swing trader. I'm with the swing traders, so I'm not really hunting for 15, 20 pips within one trading session. The fractal you can use to trade, how to do that? Well, what you want to do is, because there are a lot of fractals, so you cannot trade all of them. That's impossible. You can see on a chart like this, we see maybe 25 of them. Just a rough guess. I really don't know. I didn't count them. But so obviously, if we would be buying and selling every single fractal break, every time price breaks a fractal, and we would buy or sell, this would not be profitable, right? Although all of these levels represent a support and resistance, the lower high of those candles represent a support and resistance, and in theory, you could take a break of any of those or all of those. Taking a break of all of those would not lead to profitability because there are just too many. We need some kind of filter. So in theory, how to use fractals to trade, you could use them as is. But obviously, as I said, that's not enough. So what I do is I try to filter out which fractals in a way are important. Or you can also turn it around and say, based on my analysis, some fractals are more important than others. So with that said, I use moving averages, fibs, and trend lines, and tops and bottoms to identify the most important level. A fractal at this trend line would be a very important level, and a break of that would constitute a breakout trade in my opinion, because there's a trend line there. The trend line validates that fractal and qualifies it as an important fractal. The trend line is important, but wouldn't trade it without that fractal. So they go hand in hand in my opinion. The fractal becomes important because of the trend line. The trend line is tradable because of the fractal. By the way, Sylvia, there are a lot of other bounce trade ideas. Of course, the ones I mentioned are not the only ones, by the way. You know, bounces off Ichimoku, breakouts over Ichimoku, of course, breakouts of oscillators like CCI. You know, of course, I'm just more telling us, as I said, what I look at, but I know that. Let me take a look at that list. You know, there's other tools and indicators that one can use. Moving averages, bounces and breaks of moving averages. Let's see. The alligator, also a bunch of moving averages from Bill Williams. Yes. Fractal is indeed basically support and resistance. Some are, of course, more important than others. Obviously, this fractal, where I have the red circle, is more important than the fractal with the green circle. Why? Well, price substantially reversed at that spot, at the red one. At the green one, we just had a couple of candles stopping there. So, you know, it's not the same importance. That's why tops and bottoms, for example, are also fractals. They too have fractals because they have two candles to the left and two candles to the right that are lower or higher, which means that they have a fractal. If we take a look at the daily chart, what do we see at this bottom? A fractal. Obviously, that green one there, this bottom is important, so that fractal is very important. You know, maybe another fractal like this one could be less important. You know, it could still be the red circled fractal could still be very important from an intraday perspective, but from this daily perspective, it could be less important than the green one. All daily fractals obviously do have a certain importance, more than maybe a 15-minute fractal, because of the fact that it's a daily chart, so it has more impact on us in general, usually speaking. You know, if we break above the orange line here, where we have two fractals, you see that? The break of those fractals in this uptrend already, giving, you know, good reasons to think maybe that we could continue with that uptrend. The break of that resistance slash fractals indeed leading up to that breakout trade. Well, folks, I guess I'm going to wrap it up for today. I will have to start packing because tomorrow actually movers are coming to pick up our moving boxes. We already have some boxes ready, but we have to finish packing and start weighing the boxes, and because we're actually moving back from Ireland, where I live now, or just a few months actually, like about half a year, and I'll be moving back to Prague. So we'll be flying back on Saturday, but the boxes will be picked up tomorrow. So that's always annoying, all this moving stuff, but has to be done. So tomorrow we'll be back. I think we take a look at Ichimoku, by the way, on the 23rd. All right, so thanks for being here, and wish you all a great day. Okay, cheers everyone.